Overall, the streaming wars are over. Ripple effects from the writers' strike, including production shutdowns and the company's lawsuit against Florida Governor DeSantis, signing legislation to void development deals in Orlando. Here to discuss more on Disney earnings, Janice Min, CEO and editor-in-chief at the Ankler. Janice, good to have you back. Let's zero in on the streaming business. Losses of approximately $700 million. How do you lose that much money in streaming?
Well, that's the good number, believe it or not. Remember, this number has come way down from the previous quarter's number. You said it, Tyler, the streaming wars are over, and it's ending not on a bang, but on a whimper. And this is yesterday's call, it was just a referendum on all the decisions Hollywood has made over the past 5 to 10 years, and it does not add up. And this chase for numbers, the chase for subscribers, it is all sort of blown up in not just Disney, but every other studio that's chased this dream, Warner Brothers, Paramount. It is all blown up in their faces, and you're seeing the consequence now.
So let me interrupt and ask you why the numbers have blown up or not come through, not just for Disney, but for other streamers as well, in the way that was anticipated. You've got revenue coming from subscribers. It's number of subscribers times subscription price. You've got some ad revenue attached to some tiers in many of these companies, but it's not the same level of ad revenue that you might get in other areas. And then you've got costs. Where are the costs, and why are the costs so high? And why is there such a mismatch of income and outgo?
Well, to fight a war, you have to spend a lot of money. And so this was the fundamental problem with the streaming wars, was that there was a belief fed by analysts that the ceiling was very, very high of what the market was. And if you recall Netflix once, there were analysts who were saying Netflix would be able to achieve 125 million subscribers in the US. That number plateaued around 67, 68 million. And we're seeing that same effect happen at every other streamer who thought that the total market was going to be much, much bigger. But for anyone here who subscribes to multiple streaming services, which I think many of the audience here does, you know what you do. You love a show, you watch it, you cancel, you might resubscribe again. And it turns out that churn, and David Zaslav has identified this as the #1 problem, churn is incredibly high. And so the cost of creating content where you need to just constantly feel like you're attracting people has just skyrocketed. So you've all heard this term peak television. The costs of creating peak television are incredibly high, and you can't make money on it.
Yeah. What about regular old linear television, like the ABC network?
Well, while everyone was pivoting to streaming, and let's not forget Bob Iger in his first reign at Disney, he had reoriented the company to a streaming first mentality initiative. And along the way, linear TV was accelerating its decline. And one of the really, really bad signs in the call yesterday was that Disney linear revenue profits were off $1 billion from this time last year. And yet revenue from linear television still makes up 30% of Disney revenue. And this is not good. I mean, there's no cushion. And so if you are really pessimistic, you can see the floor starting to fall out of our legacy studios.